Hello everyone, this is John from Auto Finance. Welcome back to our channel. We are with you on 8th of December afternoon analysis. We will check some news and then we will just go ahead with our charts. As you know, the recent news regarding Evergrande is just getting more details. So, recent news from there, from that side is Chinese government is stepping in and to support the economy. They are not directly saying the Evergrande name, but they say to support the economy, they are making financial aids to companies and also to the people who didn't get their home on time and then having problems. So we will see like that money injection will help those companies and people, but in many scenarios these kind of stimulus didn't help in markets because they are not directly reaching to people and companies, and sometimes just the companies, the owners or something like that are just getting those money. We will see how these will end, but it's definitely to showing us that the problem is not something like we didn't yeah it's everybody like it was saying that everyone was saying that all right, don't worry about that much, they will just find a solution, something like that. But right now nobody is just guaranteeing these kind of things because it's getting more serious each day, and this is affecting all the markets. It's not only like a Chinese market, because like a Chinese market means that global markets, any slowdown in Chinese market will affect all the other markets. Because just imagine like this: Germany is the heart of European Union. Like if the engine of Germany stops, that means the engine of European area, Euro area stops. China is like this. If the engine of China slows down, the global economy, global factory movements slow down, because it's a massive population, and also they are making a lot of spending. If slowdown happens there, then a lot of global companies will suffer from this. For example, BMW, Volkswagen, and Mercedes. Right now, with the sales of these companies in Europe, is just covering the expenses. They are making money only in China and Asia markets. That's making the importance of Chinese market. So, real estate sector is 20% of the market. So, a sector like this slows down, so we cannot expect the other sectors just go on their way without any interruption. It will just interrupt all the other sectors as well. First, banking sector, it will be affected severely. All right, that was the news about Evergrande. They couldn't miss. They still didn't pay that interest payment, $82 million international bond payment, and also on 28th of December they have another payment, $285 million. In January they have another $235 million. These are the payment of interest, not maturing bond. In March 2020, they have a maturing bond, and it's approximately 1 billion US dollar. So snowballing effect is just going on and on. All right. This was the importance of that one. That's why we see that volatility in the market. Let's start with our charts. As you can see, we are on Nasdaq chart, and on Nasdaq, this area 16k 400 levels is just being critical. As you can see here, on many times when it reaches that point, it's getting rejected from this point. it has like even in here before all-time high, it was rejected, and once it has risen above this level, and that was all-time high, but it couldn't stay there so long, just a few days, and then it just has fallen sharply. So we can say that 16400 level is, if you don't count the all-time high, it's really tough area for this stock market. So another rejection is happening right now with Omicron case, variant case, related news and Evergrande news. So fear in the market is just piling up, and we see declines in these indices. So the critical level is 1620 If you see above that one, it may try this level. If you see below this one, it may test 16100 levels. Let's go on with our next chart.
You are ready to win with us. GAN Markets.
All right, we are on S&P chart. As you can see here, the same thing, exactly the same thing is happening in S&P. So it has tried from this low moment yesterday. It has, not yesterday, here. Yesterday we have seen a rise, sudden rise, but actually there was no reason for this rise, because officials, even Pfizer, said less effective. This vaccine is less effective to this variant, but some investors, they tried their chances to go higher, and they started a rally, and it went higher and higher. But the reality of the market has just been faced, and we see some declines in this market. So generally, after this kind of like a fast rise without any background, without any real reason behind it, we see fast declines. Right now, we have a reason for decline. That is Omicron, not that effective. Vaccine not effective against these variant. At the same time, Evergrande. So we may see fast declines in these stock markets. In my opinion, people just knew that Fed will start tapering, and just imagine if tapering starts in here, so the price will go like this. If it price in here, so the price will go like this. So they will say, you see, after tapering, the market has made the correction, but not from low to lower, high to low area. That's my opinion. That's why they have pumped the market without any certain news or technical point. They have just kept market going higher. That's it. And right now we have three serious problems, and they will just pile up, and we will see the result of that one. In Europe, just open the new cases and new deaths. You will see that, and coronavirus is just getting serious and serious as a fourth wave in Europe, and a lot of countries are experiencing these hard times. And with winter time, we will see more cases. That's really important. And I'm still saying that new coalition government took office in Germany, and they will make more restrictions in Germany, and that will directly affect DAX, the S&P, Nasdaq. All these markets will be affected from these, especially oil prices. Please just don't think that we are over and we won't have any more lockdown. It's on the table, and it may happen. They may announce anytime. All right, let's look at our last chart. All right, our last chart is German DAX index. We are talking about all the indices on this video, and German DAX index is the last one. As I said on my previous chart, DAX index is on the fall because they know it cannot go like this, and it has to make that pricing of new cases. You will see on next week, on next couple of weeks, we will have more cases. I hope it doesn't happen, but this is the reality of that one. The efficiency of the vaccination, two doses are losing and boosting shots are late in Germany. So why I'm saying this one? Because when you have the booster shot, it's not happening. Like the boosting doesn't happen the next day. It also takes time. Like you are getting that boosting around like a 2-3 weeks, and the booster progress is not on time, and they have delayed, and then they are lagging behind the procedure. The winter is coming. The weather conditions in Germany right now getting tougher and tougher. With winter, we see a lot of we see a lot of tough weather, and that will affect the spread of these virus. And also we know that the spread rate of these Omicron cases variant are more than the previous ones, so the numbers probably will reach to 100 case in 1,000 case in Germany, and that rates will reach around 1,000 daily. At that time, there will be no other option. Then new coalition government will just start a lockdown, and with the news of that lockdown, we will see at least 500 point decline in German DAX index. Please be prepared of this one. All right, thank you so much for watching us. We will be together on more news on coming days. Have a nice day. Bye.